Good morning, everyone. So, as you know, today's session is basically an orientation session for SP5 and SP5 and SA7, which are basically the investment and finance papers in actuarial science. So, how many of you have already started preparing or are sure that they are going to appear for these papers in the coming dates? Yes, none of you? Okay. So first, let's see. So basically, in this orientation session, what we are going to discuss is number one, the detailed syllabus, which means key what are the topics, what are we going to study in them, and then after that, we are going to see that at actuators when we begin our coaching for SP5, SP7, how are we going to go about the preparation? Okay. So, starting with SP5, which is the first level paper. As we know, SA7 is an advanced version of the SP5 paper. In fact, while SP5 has around 24 chapters, SA7 has only around 13 chapters. And even out of those 13 chapters, nearly 60%, 60 to 65% of the content is same as SP5, and the remaining is a build up and with along with a few new topics. So we'll begin with SP5, wherein we'll create a very strong foundation in overall investment and finance. So we begin with the very basics. The first section which we cover is derivatives and specialist asset classes. Derivatives and specialist asset classes. So inside derivatives, we have all the derivatives beginning right from forwards, futures, options, and then using these, we have different strategies. Plus, we also have swaps, etc. All of these derivatives are covered. And then in specialist asset classes, we have all the structured products. We have some higher level things such as contracts for difference. We have we also cover things like cat bonds. So all of these specialist asset classes. Now, why do we begin with this? Because when we are doing investment and finance, these are the products which form the base for our study, for our analysis, for our consulting. Whenever we will be advising anyone on their investment strategy, or whenever we will be implementing a strategy for someone, we will have to use these efficiently. So for that, we'll have to know the structure, we'll have to know how they are priced, we have to know how they give payoffs, we have to know their advantages, disadvantages, the risks that come with it, and what situations, what is their profile, कौन से situations के लिए which product or which derivative would be suitable, and कौन सा वाला will be able to match our liabilities. Because always remember, investment has majorly two parts. The first part is to match liabilities in order to ensure cash flow is generated for meeting them. And the second one is to get excess returns by investing the surplus funds. कोई भी surplus funds if we have, how do we invest them to get good returns, but at the same time also stay within the risk appetite. So that would be the very first part. Along with this, we will also cover a topic on taxation, which is not exactly related to this, but the first section will have detailed derivatives and detailed specialist asset classes along with taxation. Now, inside taxation, what do we do? Taxation, as we know, is basically what we have to pay to the government, to the regulators, when we are dealing in the assets, when we are generating any income on different kinds of activities. It is like a cess charged by them. So now, and under taxation, we'll be looking at different kinds of taxation regimes. So globally, all countries follow different kinds of taxation regimes. We will be looking at all the different kinds that are available. We will be looking at their impact on our investment choices. We will also see, for example, a taxation regime where both income in the form of, let's say, interest on bonds or dividend on equity shares, and capital gain, which is basically increase in price or capital appreciation. Again, capital appreciation can be of two types. One is when you actually realize it, in the sense when you have bought an asset and when you sell it off and you get that money, that is realized capital gains. And the other one is not unrealized or accrued. In this case, at the end of every year or at the end of every interval specified by the law, your value of capital asset will be assessed and you will have to pay tax on the difference. It is not necessary that you have sold the asset and received money against it. Even if you are holding the asset and there is a significant change in value, you will be asked to pay tax on that change in value. So that is the unrealized or accrued capital gains. So if a taxation regime, how do they treat or how do they tax both these kinds of incomes, whether it's a general income or a capital gain? Accordingly, we will decide what kind of assets to choose. If, let's say, the tax rate is higher on capital gains, then we will go for assets that generate more income, more regular income, rather than give excess or give high rate of capital return, because then we will be saving a lot on tax as well. On the flip side, if income tax rates are very high and capital gain tax rates are low, we will go for an asset that does not have a lot of income opportunities. For example, a low dividend paying share. A low dividend paying share will not generate a lot of income, but it will give us more return in the form of capital appreciation. So that is our first section. Next, we come after looking at all the products and the taxation. Now, apart from taxation, there are other broader or other macroeconomic factors that are going to influence our decisions and our investments. So then we'll start looking at those. The first one is economic influence. In economic influence, we'll be looking at how the monetary policy, how the fiscal policy is going to affect us. Fiscal policy, part of it will be covered in taxation because tax is a very big part of the fiscal policy, but otherwise as well. Monetary policy, things like quantitative easing, rise in interest rates, inflation, all of these will come under economic influence. How are they going to impact us? Then we have theory of finance. In theory of finance, basically what we are going to do is we are going to see how financing works. How financing works, what are the sources of finance, why do we need financing, what are the benefits, the disadvantages of different sources, and how to go about it. That would be theory of finance. Then we come to regulations. Another external factor that greatly influences our investments. So we'll have regulation, legislation. Legislation is basically the laws. So the legislation framework, the regulation, both of these will cover things like, for example, we are we know about Basel regulations for banks. We know Solvency II for insurers. There is OSRA also. Apart from these, globally, different regulators have different regulations. Even not if at such a large scale, they will have some local regulations. Plus, they'll also have some legislations. Now, how is regulation and legislation different? Regulations are imposed by regulators. Legislation is imposed by the lawmaking body of the government. So, regulation would be a little more focused on a particular sector. Legislation will be applicable to the entire economy with some more, with let's say some more focus on few sectors in few areas. So wherever required, they will focus or they will specify sectors. But regulation is more for regulating things. Legislation is the lawmaking body, which means this must be followed. Regulation is like a supervision. So the regulators will supervise even if you go a little here or there. If you are able to explain your deviation, then regulators might consider it. But that's not the case with legislation. So then we'll be looking at regulation and legislation, both these frameworks, what in different markets, what does the framework look like, and how are we going to incorporate it in our strategies. Then next we have a few theoretical chapters. In fact, even these are slightly theoretical, but the coming few chapters are completely not right now. First we look at fundamental analysis. Fundamental analysis के साथ we also come up with valuation of investments. This chapter is definitely very important. Plus, it is also slightly numerical. So we'll be having a lot of numericals on different investment valuations. Now, this investment valuation is going to cover everything. It's going to begin from the basic bonds, like the basic government bonds, zero coupon bonds, corporate bonds. It is going to go up to index linked bonds, convertible bonds. Then coming to equity, we'll have different kinds of equities to value. We'll also learn about property valuation, real estate valuation. After that, we also move to derivatives, investments involving derivatives like futures, options, swaps. All of these investments, how to value them, different methods of valuation which can be used, whether it is methods could be market price based, they could be historical data based, they could be some forward looking assumptions based. All of these things will be covered under valuation. And fundamental analysis. Now, in investment analysis, broadly there are two categories. First is fundamental and the second one is technical. Fundamental analysis analyzes investments on the basis of all the fundamentals of that particular issuer. Now, if it's an equity, it's going to focus on the company's management, the company's business, the company's financials, company's prospects, competition, industry, their costs, input costs, their selling price, their strategy making, all of these things. So, focusing a lot on the quality. If let's say we are doing fundamental analysis for a bond, then whoever the issuer is, if it's a corporate bond, then that company's same things, management, business, all of those things. If it's a government, then their credit rating, the government's different policies, their government's outlook for the economy, those things will be considered. Their what is the gearing? Gearing in the sense their debt equity ratio. For government, we look at how much debt have they already raised, how much of it is internal, how much is external, how much is in domestic currency, how much has been raised from different sources. So all of these things will come under fundamental analysis, and what are the factors which we see, how can we study those factors. So there is a difference. What we want to see and how do we see it. So for example, if we want to see the gearing, we want to see how is the gearing of the company, what is their debt to how much debt have they raised, and what is the riskiness because of that debt. How are we going to see it? This is what we want to see. How will we see it? We will look at the debt equity ratio. We will look at the interest coverage ratio and other such metrics. So in fundamental analysis, we'll be focusing on that. And then of course, we'll also have valuation of investments. After that, we come to two purely theoretical chapters, that is investment indices and industry classification. Now, investment indices, what is an index? An index is basically a non-unit based number that is representative of the market. Because it's an investment index, it's representative of the market, whatever market we are talking about. So all countries, all economies have different investment indices. One country or one economy can also have multiple investment. In fact, it does have multiple investment indices. What all are the constituents of the indices? How is the value of an index calculated? What are the different ways of constructing an index? What are the things? So, for example, if it's an equity index, how many stocks or how many shares do we want to include in the index? Whether it's the top 100, it's the top 50, it's the top 500. So, for example, FTSE 100 is 100 shares. Nifty 50 in India is top 50. US ka S&P 500 is top 500. Now, if we want to take top, then how do we classify them as top? Do we classify them on the basis of their revenue? Do we classify on the basis of their profits? Classify on the basis of their market capitalization? Usually, market cap indices are the most common and considered to be the best representations. But there are also few drawbacks with that. Instead of that, that's why we can use revenue, etc. also. So that is on construction of indices. How do we want to account for the income? So all of these shares will be paying dividend. How do we construct a total income index? How do we incorporate the ex dividend and the cum dividend rates? All of these things will be covered in investment indices, where we'll also be studying the major indices in the world. And then we have industry classification. In industry classification, we are going to basically see the 13-14 major industries into which a company can be classified. Now, of course, it's not a black and white thing. There are always grays. So there will be companies that do not fall completely under one single industry. They can be a combination of two industries. Now, for every industry, what are the characteristics of every industry? And how does those characteristics make them appropriate for our investment strategy? So now, for example, if we want to be inflation protected, if we want to be inflation protected in our investments, then we are obviously going to go and we have to go for equities. Then we'll go for an equity of an industry who is very, very sensitive to inflation. Because if they are sensitive to inflation, then their prices, their income is going to be very strongly impacted by inflation, and it's going to be adjusted for inflation just like we wanted for our strategy. So different characteristics of all the industries. That is going to be the next part. After that, we come to few chapters on performance measurement. We come to few chapters on performance measurement. Now, what is performance measurement? Whenever we have investment consultants or we have investment strategists, what we need to see is measure their performance. Whatever strategy they are making, whatever consultancy they are giving, they will have to back them with numbers. So for that, we have performance measurement, wherein we see how to measure an investor's performance. We see different metrics. Again, this will have quite a few numericals. We see different methods. We see their advantages, their disadvantages. Plus, we also see a very important part of this chapter is attribution analysis. A lot of questions on this over the years. Now, attribution analysis is going to basically break up investment performance into sector selection and stock selection. So, whenever we are creating an investment strategy, we tend to have it in two layers. So there is always a benchmark which we compare with, which we are given in order to ensure that we are being consistent with the overall objectives, we are being consistent with the required return, required risk, etc. So that's the benchmark, and we might deviate a little from the benchmark. So on deviation, we can deviate in two ways. The first way is the benchmark is going to have different asset classes, which are the different sectors. For example, it can have, let's say if it's a 3 asset thing or a 4 asset thing, let's say. We have bonds, we have equities, we have property, and we have cash. There are 4 classes which the benchmark has considered, and let's say it has distributed it in the ratio of 30-20, 30-20. 30 in bonds, 20 equity, 30 in property, and 20 in cash or money market instruments. Now, it might so happen that as an investment manager, you altered this ratio, you altered this proportion. For example, if the equity markets were performing better, you allocated some more to equities by taking out money from, let's say, the bonds. You reduced the bonds portfolio and invested some of the money into equity because equity was giving better returns. So that was a sector selection decision. Let's say inside equities, of course, you have a lot of options. Now the benchmark considered ABCD stocks, and you decided either you skip one stock or you pick up another stock. So that is a stock selection decision. Now, attribution analysis basically sees whatever your returns have deviated from the benchmark. That deviation they are going to analyze. How much of that deviation is because of sector selection and how much of that deviation is because of stock selection. So that is attribution analysis. Extremely interesting questions, and sometimes it can get a little complicated. So we are going to do a lot of these questions in performance measurement. After that, we have overall risk control. Now, in overall risk control, we basically study all the kinds of risks that can crop up. Broadly, we have market risk, we have liquidity risk, operational risk, interest rate risk. All of these things are there, credit risk. So, what are these risks? How do they arise? How can we mitigate them? How can we mitigate them in all levels? Number one, how do we completely stay away from them? If we do have that risk, then what hedging techniques can we use to lessen the risk, and how much of it will always remain, which we have to tolerate? So, overall risk control is going to focus on A to Z of risk. The kinds of risk, what are the major impacts of those risks, which asset classes or which investment strategies are prone to which kind of risk, how to monitor them, how to calculate them, and how to handle them. All of it will be covered in overall risk control. After that, the next 2 remaining parts, which are very important again, are actuarial techniques and portfolio management. Now, in actuarial techniques, we'll be looking at things like asset liability modeling, risk budgeting, all of those things, matching, mismatching, liability driven investment. And in portfolio management, also, we are going to look at different kinds of or different styles of management. That is, of course, we have active passive. Apart from that, we can have value style, growth style, contrarian, momentum. All of those things will be there. Plus, we'll also have portfolios of derivatives. So, different strategies that can be formed using derivatives. What all assets, how can we combine different asset classes or asset markets in order to create a well diversified portfolio? How to value those portfolios, how to manage their risks. All of those things will be covered in portfolio management. Okay. Any questions up till here? Okay, great. So this SP5 syllabus is broadly so the this is broadly broken up into six parts. It's broken up into six parts. We have six revision notes and we have six X assignments. Plus, apart from that, we also have the questions at the back of every chapter, which we try and solve. How are we going to go about it? We have recorded lectures for all the topics and detailed recorded lectures from the recent diets. Now, after looking at those lectures, you view those lectures, you understand the concepts, then you try to attempt the revision notes, which is basically the past paper questions on those particular topics. Now, after you complete the classes and you start attempting the revision notes, we start our weekly classes for discussing questions of the revision notes, for taking up doubts. In case any topic is still unclear after watching the video, then we might have a few extra classes to cover those topics in more detail. After completing the entire syllabus in this way, then we come to our X assignments. Trust me, it is extremely important to solve the X assignments in both SP5 and SA7 because they have a lot more questions. They have a lot more detailed analysis of the chapters. So while reading the chapters, you might not realize that how these parts might be tested. So through the X assignments, you get an insight into a lot of it. So after the syllabus completion, we come to the X assignments. We solve some more past papers that are not covered in the revision notes. These past papers we do at the end of the curriculum because by then we want in the revision notes you'll be focusing on topic wise questions. Few papers we leave for the end so that your mind gets trained to switch from topic to topic, plus also combine different topics. Now SP5 is still relatively straightforward, but since it's an SP level paper, of course you will be required to utilize different topics in your answers. So it's not like this question is from this chapter and you just solve it. No, there will be a lot of case study based questions. There will be a lot of analysis based questions where you maybe one particular topic will be the highlight, but apart from that your overall knowledge of the investment and finance domain will have to be put to use in order to frame good answers. So in those past papers, that is what we are going to focus on along with time. That how much time is required to solve which questions, what is the ideal time required, plus also the marking schemes. We'll be discussing by looking at the marks, by looking at the command verbs, how to decide how much to write. So all of those things will be done after that, along with mocks, which you will be giving, and then getting a detailed evaluation on what were the goods, what were the bads, how to improve, what all to continue till the exam. So that is for SP5. Okay. I hope all good. Great. Next, coming to SA7. Now, as we know, SA7 is basically just a build up. It is a more advanced version of SP5. However, there are few topics which are still new in SA7. How is the syllabus structured? Like I said, there are 13 chapters basically. We begin with the different asset markets. Now, by different asset markets, what do we mean? Just give me a... Sorry. We won't start with asset markets. First, we'll look at the investors. By looking at investors, what do we mean? So, we'll look at investors from two angles. First one is retail investors or individual investors. Who are they? They are basically people like me and you. They can be high net worth also. Now, retail individual investors, what is their objective? Usually, they will have some set goals. They will have some set liabilities in the form of usually things like their rent, their day-to-day expenses, the plans they have for their children, plus their housing goals, education goals, all of these things, along with their risk appetite. So because they are individual investors, their risk appetite will obviously depend on their circumstances. So now those retail and individual investors, what kind of investments do they focus on? So we'll be studying all the investments available for retail and individual investors. For example, ranging right from pension schemes, life insurance policies, different kind of insurance policies, to asset markets like bonds, equities, where all individual and retail investors can invest, going up till mutual funds and derivatives. Then we come to institutional investors. Institutional investors like all companies, banks, insurance companies, pension funds, mutual funds, all of these are the institutional investors. Their risk profile, their liability profile is going to be completely different from that of individuals. So, how do we focus on that? For example, for life insurance companies, they will probably have longer term liabilities. Not most of their liabilities may not be very in fact, they will be very sensitive to inflation because life insurance policies specify a nominal amount. So, over the years, that same nominal amount might not have the same real value. So, those things will have to be seen. Apart from that, pension funds, whether it's a defined benefit, whether it's a defined contribution, how do their strategies or how do their investments need to be managed? After that, if we have banks, then banks usually borrow short term and lend longer term. So, how to bridge that gap properly through the investments? How to ensure that cash flow profiles of the assets and the liabilities are matching, the inflation characteristics are matching. Apart from that, currency characteristics will be there, duration characteristics will be there. All of these things will be studied for institutional investors. After that, we come to the asset markets. Now, asset markets is basically, again, all the assets starting from bond, equity, property. So you can see a lot, especially this chapter, a lot of it is going to come from SP5. Because in SP5 also we would have covered all the asset classes to a great extent, all their characteristics. So, how are those asset markets there? How do we make assumptions? For example, yield curves are there. How is yield curve? How is the overall yield in the economy impacting different asset markets? What advantages, disadvantages, suitability, all of those things. And along where asset markets is for equity, bond, property, etc., we also have a parallel derivative markets where basically this asset market is the underlying. So derivative markets and structured products. So for derivative markets, again, very big dependency on SP5, because in SP5 we have two full chapters focusing only on derivatives. So over here in SA7, it's just given in extremely summarized form. What are the derivative markets? What are the different instruments available in the derivative markets? How they work? But in SP5, you'll have to build the base of exactly getting comfortable with the derivative markets and what ways can they go. Structured products is nothing but basically like a portfolio or a specialized product made using different things in order to achieve a specified objective. So that's relatively more theoretical. But derivatives market, again, a lot of questions are seen, even practical, that are not there in SA7 individually. But if you have good hold on SP5, then only you will be able to solve these questions. After derivative markets, we come to corporate finance. Whether to raise debt, whether to raise equity. If debt, then from banks, through bonds. And plus, how is a detailed analysis of how this debt equity ratio is going to impact our company, plus also other considerations like tax, dividends, what is the dividend policy going to look like. All of these things will be covered in corporate finance. It is basically going to focus on all the institutional clients that we are going to have as investment consultants. After corporate finance, we again come back to the macroeconomic factors of regulation. We have economic influences, monetary influences, and taxation political influences. Economic, monetary, and political influences. Majority of this is going to focus on quantitative easing and quantitative tightening, which is basically the monetary policy instrument used by the government or the central banks in order to manage the liquidity in the hands of the public. How is this quantitative easing? It has a multifold effect. So how are they going to affect different investment returns, different asset prices in a situation? How to decide what kind of move to make next? All of those things are going to be covered for quantitative easing and quantitative tightening. Apart from that, for economic and political influences, the impact of media, the impact of different political regimes, stability, instability, all of those things. So that, and in regulation, again, same thing, where we focus on things like the Solvency II, etc. All the regulations for institutional investors mostly. And for retail investors, regulation is broadly things like what kind of asset classes are restricted, why, all of those things. Then we have investment analysis, investment psychology, investment strategy, investment management, and finally investment consulting. So now these 5 topics together basically is a lot to do with this. The last 2 big portions of the SP5 syllabus are going to be covered here. Investment analysis is going to focus again, it is going to take up fundamental analysis and also a lot of the technical analysis. Investment psychology is what we also know as behavioral finance. In SP5, we have theory of finance. यहाँ पे we do different things noticed in behavioral finance. In investment psychology, we'll do a more deep dive analysis where we focus on rational logic and how those things come or appear in the form of different biases and how they affect the investment markets. So, for example, biases like herding, we have biases like regret aversion, we have hindsight bias, all of anchoring, all of these things, how does the psychology basically impact investments? That will be investment psychology. So this will come from behavioral finance. This comes a little from fundamental analysis. Plus, they have technical analysis. Investment strategy and management. Investment strategy, management, consulting. In fact, all these 3, you will notice a lot of overlap in topics among these 3 as well. For example, active and passive management. It will be covered in all 3 chapters in bits and pieces, but in SP5, under portfolio management, it is covered in extreme level detail. So if you have already done that, here in SA7, you can easily just give it a read. So that's going to be active passive management, value growth, contrarian styles. We will have different measures like Sharpe ratio, Trenner ratio, information ratio, tracking error, all of those things. We will have investment mandates, how to form investment mandates, what kind of restrictions to put in investment mandates, how to abide by them. In strategy building, again, we'll have a detailed thing of how to match liabilities. There will be liability driven investment. There will be sensitivity of interest rate, sensitivity of inflation on our investments, how to use metrics like PV01, duration, both Macaulay and modified. A very detailed analysis of LDI strategies using swaps, using bonds, all of those things will come under investment strategy. Extremely important chapter and extremely heavy chapter as well. Then we have investment management and consulting, where basically it is relatively very light, and honestly 80% of these 2 chapters is just SP5 repetition. So now for SA7, we don't have any revision notes. In SA7, what we do is, again, recorded lectures are there. Watch the recorded lectures. It's just 13 chapters. Very small syllabus to say. But the thing is that lesser time has to be allocated on watching the lectures and reading the content. Greater time has to be allocated in SA7 for paper solving. Paper solving is very important because SA7 you will hardly see direct theory questions or direct numerical questions also, for that matter. Most of them will be twisted. Most of them will require you to use your entire knowledge available. So that's why 13 chapters, I think, is we have total for 13 chapters. Recorded lectures would be around a max of 20-25 hours, I think. I don't think we cross 25 hours for the recorded lectures. After that, we solve X assignments for SA7, which are, again, we have 6 X assignments, and we solve past papers. Past papers, few papers we do just reading, just learning how questions are being answered, and after that we start solving papers. The more recent term papers we will focus for understanding how to approach questions, the command verbs, the length of the answers, how many points to write, the depth and breadth of answers, plus the time allocation. And again, at the end, you will have mocks. Now, our past papers again, we'll definitely do the IFOA papers. For IEI students, even IEI papers will be covered. So, more time allocated to past paper solving in SA7 and lesser time to do the content. In fact, if you look at just SA7 content in isolation, it's very little. But if, let's say, you are not preparing for SP5 or you do not have prior knowledge from SP5, then you'll also have to add on a few topics which we will provide from the SP5 lectures so that you get a proper foundation on those topics. Okay? Any doubts? All good. Any questions? Okay then. I think we can call it a day. I hope this session was helpful. Now, after this, we are going to begin with our weekly SP5 and weekly SA7 sessions to discuss a more detailed plan, progress tracking, and discuss questions and doubts. Okay. Thank you so much, all of you.
मैम
Yes.
मैम ये पूछना था कि मैम SA7 में रिवीजन नोट्स नहीं होते ना प्रैक्टिस के लिए,
नहीं,
और SP5 में
कोई
होते
भी
हैं?
no SA level papers have revision notes.
ओके। और मैम मैं ये पूछ रहा था कि सपोज कि इस टर्म में मैं CS2 दे रहा हूँ तो उसके साथ SP5 कंबाइन कर सकते हैं?
From IFOA
हाँ, IFOA
चल रहा है अभी जून जुलाई अगस्त CS2 कितना हो गया उस पर डिपेंड करता है एंड प्लस ऑल्सो डिपेंड्स ऑन व्हाट अदर कमिटमेंट्स यू हैव इफ यू आर वर्किंग और इफ यू हैव कॉलेज एग्जाम्स और समथिंग एल्स.
मैम, नॉट CS2, CP2.
CP2 मतलब मॉडलिंग.
हाँ, मॉडलिंग.
हाँ, then you can definitely appear for SP5.
अच्छा,
Or
मतलब
if you have
साथ
any
में.
other paper left, then you can also discuss that and see if you want to appear for anything else. क्योंकि if you want to appear for SP5 and SA7, either you do it in the same diet or अगर इस diet में SP5 दे रहे हो, then next diet में do SA7.
ओके, तो मतलब कंबाइन कर सकते हैं ना CP2 के
Yes,
साथ
yes,
एक्चुअरियल
easily,
मॉडलिंग के?
easily.
ओके। और मैम दूसरा मतलब ये कोई इन्वेस्टमेंट में अगर काम नहीं कर रहा है मैम, कोई और सेक्टर में काम कर रहा है, तभी SP5 दे सकते हैं ना, कोई प्रॉब्लम नहीं है ना?
No problem. हाँ, ये हो सकता है you might be asked to justify your choices in your organization. Actuarial side में कुछ नहीं करना, but in your organization, by the higher levels, you might be asked कि suppose if you're working in general insurance, then why not SP7, SP8? Life में why not SP2? So that answer you'll have to prepare कि why you are choosing to do that. But apart from that, no problem as such.
ओके मैम। और मैम ये पूरे वीक में रिकॉर्डेड लेक्चर्स देखने हैं और वीकेंड में डिस्कशन होगा, ऐसा ही है ना मैम?
Right.
ओके, थैंक यू मैम।
Thank you. Thank you so much.